The NCLT admits IndusInd Bank's plea seeking insolvency proceedings against Zee Entertainment, casting doubt on the company's merger with Sony. The management, however, says they remain committed to the merger.
Brokerage house CLSA raises its target on GAIL to around 125 rupees a share, recommends a buy factoring in 40% gas tariff hike. In March, the stock is up close to around 2%.
Sonata Software acquires Texas-based IT services provider Con Systems for over 1,200 crore rupees in what its biggest acquisition to date. Stock surges about 4%.
Sandur Manganese gets an approval to more than double its manganese ore production to around 5.8 lakh tons a year. HG Infra surges as it emerges as the lowest bidder for RVNL project.
You're watching us here on Chartbusters on CNBC TV 18. As always, I'm Manglam Malu, with me Nigel D'Souza. Looking good for the market from the lows. There has been a bit of a bounce. The question is whether this sustains or not. Because if this does, then there could be a case for some short covering ahead of the big expiry. Where it goes is something that we'll have to monitor only in the second half. The mid-cap index mildly underperforming.
Well, that's right, Manglam. And you saw some stability in the Nasdaq. That's why, you know, the hope was that the Nifty IT index will perform, and that seems to be the case today. That's up close to around 0.5%. I'd pull up the IT index. I think it was up nearly around 1%, but it's still holding with a gain of close to around 0.3%. So that's clearly doing pretty well. And giving it a little bit of company is Nifty Bank. But the star really for the last 1 year or last 18 months has been ITC. All those memes going out of the window. The stock had around 390 rupees this morning, moving from strength to strength. But let's focus on the markets and get a trade out there. Sachidanand Utekar joins us. Hi, Sachi. Morning. You know, we are seeing a bit of a bounce. Do you believe it has more legs? And what would your trade be at around 10:30 a.m. at around this 17,600 odd mark?
Good morning, Nigel. Nigel, I think the broad structure for the market still remains weak. Eventually, we see Nifty scaling towards 17,300. But if you look at today's expiry data, we are of the opinion that the swing low, which has been established today at around 17,450, may not be breached. And we may see the expiry shaping up somewhere close to 17,550, 17,600, where its 200-day exponential moving average is placed. So as of now, I think the short covering which we have seen, I think this particular move may sustain, but eventually we don't see it, sustaining, further. So I think it's better to, create some short positions on the way higher. And right now, the expiry somewhere seems to be placed at around 17,600 itself. When it comes to Bank Nifty, the expiry range is placed at around 40,000 to 40,400. So even here, we don't see any substantial decline in today's trading session. Probably it's a day of good recovery, and this particular recovery may sustain throughout the day.
All right, Sachi, take that point. Going into trade today, the 17,500 put writers and the 17,600 call writers were extremely expensive, were extremely active. So maybe telling you that 17,450 to 17,650 is the range that they would be playing for. Individual stocks, what are you looking at today?
Mangalam, slightly from the positional perspective, both the recommendations are on the short side. First one is Grasim, a clear-cut underperformer, a low top, low bottom sequence on its weekly scale. We also have a falling tree formation, which is again concluding that this particular trend may continue on the lower side. So we are recommending building fresh short positions in Grasim. The stop loss should be placed at 1615. The positional target is placed somewhere close to 1530. The second short call is on Bajaj Auto, where we have seen some bouts of profit booking in the last couple of trading sessions. The stock has already moved below its short-term averages, 5 and 20. We're expecting further weakness to seep in. The stop loss should be placed somewhere close to 3880 on the March futures, and fresh shorts could be deployed here. The positional target is placed somewhere close to 3740.
Okay, all right, Sachi, thanks so much for giving us those details. For the time being, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Nitin Sharma joins us from moneycontrol.com to talk about a stock that he's tracking rather closely. Nitin?
Mphasis' third quarter result was below expectations due to the headwinds faced by digital risk business. USD revenue fell 2.5% sequentially, while weakness in rupee helped to a flat revenue growth in the INR terms. EBIT margin was also within the guidance range, although lower than what Street was expecting. Deal win, on the other hand, was very strong with $401 million wins on the 5 deals, one of which being over $100 million plus. 74% of the deal wins were in the new gen areas, and segment-wise BFSI contributed 70%. This was the second highest ever deal wins for the company in the history. Digital risk business has been seeing headwinds as underlying property market is seeing volume freeze while interest rates are rising. This led to 85% fall in refinance and repurchase volume. This situation isn't expected to change in the near term and likely have some impact in the next financial year as well. Management outlook is still unchanged with 15.25 to 17% EBIT margin and revenue growth in both BFSI and non-BFSI vertical. Management sees 4Q to be better than due to absence of seasonality and a strong deal pipeline. Vendor consolidation expected to add to the tailwinds. Looking at the valuation, Mphasis is currently trading at long-term average PE multiple and broadly discount to the other mid-tier IT names. Renewed interest in mid-tier IT businesses is a positive for Mphasis. Investors may add the stock with a medium-term view.
Thanks a lot for that, Nitin. Well, for the time being, though, we'll slip into a short break. You come back. We continue our focus on markets as well as stocks that are moving around. Welcome back. Well, the markets are trying to pull back a little bit from the lows of the day. We're up close to around 40 points as we speak. But Mangla, the problem is the Nifty Bank.
Yeah.
Yet again, if you look at it, the Nifty Bank was up and about. It was up close to 150 points just around 15 minutes or so ago. Now it's up hardly around 40 points odd. So from the highs of the day, it's seen a correction yet again. That's clearly the pocket that's taking a harder knock. But the stock that's in focus this morning is Zee Entertainment. It's still under pressure, though it's recovered a little bit from the lows of the day. Nimesh joins us to fill us in with all of those details. Nimesh?
Hi Nigel. So the Zee stock is under pressure largely because last evening NCLT approved IndusInd Bank's plea for an insolvency against the company. Now, according to IBC rules, once the company is admitted to insolvency, moratorium kicks in, barring any transfer of assets. What technically this means is this can further delay the merger process with Sony. Now, reacting to this, Zee promoter Puneet Goenka spoke to all the channels and he gave a quote saying, "We are committed towards the merger with Sony, and we will do and will take all the required measures for an early completion or a timely completion of the merger." UBS put out a note today morning. They have, on Zee Entertainment, they have a buy rating, target price of 350. They believe that the amount is not very large, just 83 crores, which is in contention with IndusInd Bank. So this could further delay the merger process. In fact, according to the UBS note, there are a couple of options in front of Zee Entertainment. One, they can move to NCLT against the NCLT order and get the order squashed. So that could be the first option, which I believe the company is likely to explore very soon. The second option is pay this amount of 83 crores as part of dispute and let the merger process go through. So clearly, this is another roadblock as far as the merger between Zee and Sony is concerned. Couple of things to watch out for. One, whether the company moves to NCLT, and whether they get a relief from NCLT. That's something to track. And second is whether they go ahead and do some settlement as well. So things are going to be a little fluid, but today the stock is under pressure because NCLT yesterday has approved IndusInd Bank's plea for an insolvency against Zee Entertainment.
Take that point, Nimesh. Thanks a lot for that. So that's about Zee, lower in today's trading session by 8%. At one point, it was down in double digits as well. From there, has seen a wee bit of recovery, but questions remain on the timelines of the merger itself, and as a result of which, there is some uncertainty out there. The other stock that I'm watching out for today is Sonata Software. Now, the stock's doing well on account of a big acquisition that the company has made. It's the biggest acquisition in the company's history at the high point of the trade for Sonata Software, up around 5.5%. They've gone ahead and acquired Quant Systems Inc., which is a Texas-based IT services corporation. What are the terms of this acquisition? And when I say big, Nigel, 540 crores or $65 million is what they're going to pay upfront. Over and above that, almost $95 million or near 800 crores would be paid in the next 2 years based on the achievements that the company makes. And then there are additional target-based payments as well. So what could be the exact outflow is something that we will know shortly once the management joins us. But importantly, Quant System Financials has a lot of BFSI and a lot of other big logos as well as their clients. They've done revenues of $37 million in calendar year 2022, which has jumped from $8 million in CY20. So the question is, how much can Sonata grow it, the scale at which it can grow? Because at $37 million, it's very small compared to Sonata's own quarterly revenues of nearly 2,300 odd crores. They've paid 540 crores upfront, which amounts to their cash of close to around 600 crores. So they do have cash, But the question is, the margins, the scalability, and the synergies in this business. Ahead of this announcement, the stock was up 14% this month. At today's move of around 6.5%, that gives you over 20% up move in Sonata Software itself. Questions extremely important to be posed to the management. And you don't have to wait too much. In fact, the management will join us soon to discuss their new acquisition at 11:15 a.m. You got to be staying tuned for that.
Well, let's move on then for the timing. Let's get a word coming in from Samir Arora of Helios Capital, who is upbeat about the market performance despite the recent slowdown, and also talks about how the Adani Group is affecting the markets. Let's hear him out.
In general, if you look at it slightly bigger picture, first of all, the market this year has corrected less than 4 or 5%, I think even less. So in that sense, you can say, and we say in all interviews, and we think also, that who knows exactly where the next 5% will go up or down. And if you want to spin it positively, which in a broader sense, I think it's this, that with all these events, particularly the Adani event, which is more specific to India, and therefore, and other things about US rates being higher or expected to be higher, to be down 1.5% this month at an index level is not the end of the world. We had bought Ambuja Cement and a little bit more of Adani Port. The Adani Port was looked at more as reasonably valued even during the last 2-year rally Adani stocks. Collectively, the market has said that you bring down your group or your own network by whatever, X 50%. And from here, you start a sustainable business.
Holding on to its gains, and that's courtesy of two stocks. One, ITC, we spoke about that, 390.6 on that stock. And the other one is Reliance. That's too, supporting the index right now, currently at the high point of trade for that heavyweight. So ITC and Reliance, both of them ensuring that the Nifty maintains its gains despite the Nifty Bank, which has now moved into the red. But we do have a bunch of stocks which we want to focus on. Greaves Cotton is one of them. And in our all-boys team today, we have Sonia joining in. Sonia.
Thanks a lot for that. So, I'm watching out for Greaves Cotton because there's a massive leadership change or expansion that they have announced across their verticals, both retail, finance, even in the electric mobility segment. So, it's interesting. And that's why the stock is up about 1%. Now, they've appointed Mr. Narasimha Jayakumar as the CEO of the retail business, Mr. Sandeep Divakaran as the CEO of Greaves Finance, and Mr. Chandrasekhar Tyagarajan as the CFO of Greaves Electric Mobility. So, these are 3 important leadership changes that they've made. Now, they've identified a couple of growth areas as well. So, just want to talk about that. They're looking to develop clean mobility solutions in a big way. They're looking to build a future-ready portfolio of businesses and looking to build a dynamic technology program through continuous innovation. And the pedigree of these 3 leaders that have joined them is quite good. A couple of them, Narasimha Jayakumar was earlier heading Google in one of the categories. You had Sandeep Divakaran as well, who is now the CEO of Greaves Finance. He comes from Ola Electric. Chandrasekhar Tyagarajan as well, earlier was with Birla Soft. So, the strong pedigree management and this focus area will be electric mobility for them. It continues to be that way. But the stock, unfortunately, has come off quite a bit from the highs in the last couple of years. In fact, if you map a 3-year trajectory of Greaves Cotton, it has been absolutely flat. It's not done much for investors. So let's see if these new leaders change the fortunes of the company.
Okay, all right, Sonia, but we can't let you go at that. What about Mahindra CIE?
Well, good numbers, Nigel, really good numbers. And, this is a stock that has already doubled in the last 1 year. So the street likes the fact that the growth has been pretty good, especially in the European business, considering all the challenges that we've seen. Revenue growth of 26% overall. The EBITDA has gone up 93%. The margins look quite inflated. That's because there was a one-time impact. There was a profit on their land sale to the tune of 38 odd crores. X of that, the margins are still quite healthy at 15%, 15.7% to be precise. There's a good growth in their European business as well. They say that the European automotive market has finally shown some recovery because the semiconductor shortage is easing. And in that context, it's a 43% growth in Europe. The EBITDA is up 88% and the margins have improved substantially over 300 basis points. That's because energy costs have stabilized and inflation, the extra cost has been passed on to consumers now that demand has picked up. Back to you.
All right, Sonia, thanks a lot for that. So on that note, we're out of time on this edition of Chartbusters. From Nigel and me, we take your leave, but you don't go anywhere because Sonia is still here on the other side of the short break. She will be joined by her colleagues at Trading Hour.